back with me. Don't forget to like, comment, and subscribe to this YouTube channel. Okay, this time I want to talk about insurance. Insurability. This can be answered by private companies, typically share 7 common characteristics. One is number of serialized policy units and insurance operations, pooling result the majority of insurance policies over individual members of residents. Allowing insurance to benefit from the law of large number in which very laws are similar to that laws. The exception include the of London, which is famous for insuring the life or health of actors, sport figures, and other famous individuals. However, exposure will have particular difference. We may lead to different premium rates, different laws, the types of laws expressed at no time and plus our cost. The classic example involves the death of an insurance person on a life insurance policy. For automobile accident and work injury might all easily meet this criterion. The types of laws might only be defined in theory occupational disease. For instance, my involved of exposure to injuries condition when a specific time, place, or cause is identifiable. Ideally, time, place, and cause of loss should be clear enough that a reasonable person with sufficient information could objectively verify all three elements. Makes accidental loss. The event that constitutes the trigger of a claim should be fortuitous or at least outside the control of the beneficiary of the insurance. The result be pure in the sense that it results from an event for which there is only the opportunity for cause event that contains speculative elements such as ordinary business risk or even purchasing all lottery tickets are generally not considered insurable. Next, lyrics rules. The set of rules must be meaningful from the perspective of the insurance premium. Need to cover both the aspects of laws, but the cost of insuring and administering the police, industry in adjusting laws, and simply in the capital need to reasonable assert that the insurer will be able to buy claims. For small laws, the latter cost might be several times the size of the expenses of laws. There is rarely any point in buying such costs unless the protection offer has real value to a buyer. There is rarely any point in buying such costs unless the protection offer has real value to a buyer. Please offer double premium if the likelihood of an insurance event is so high or the cost of the event is so large that the resulting premium is relative to the amount of protection offered. Then it is not likely that insurer will be purchased even if not on offer. Furthermore, as the accounting profession formally regulated in financial accounting standard, the premium can be so large that there is not a reasonable chance of a significant loss to the insurer. When there is no substance of loss, then the association may have the form of insurance but not substance. Next, calculable loss. There are two elements that must be at least estimable, if not formally calculable: the probability of loss and the attendant cost. Probability of loss is generally an empirical exercise. Well, cost has more to do with the ability of a reasonable person in possession of a company of the insurance policy and the proof of loss associated with the claim present under that policy to make a reasonable, define and objective evaluation of the amount of the loss recoverable as a result of the claim. Dan apa sih?
Oke, katakan.
Next, limit risk as catastrophic loss. Insurable loss are ideally independent and catastrophic, meaning that the loss do not happen all on sign that individual loss are not sufficient not to bankrupt the insurer. Insurers might prefer to limit their exposure to a loss from a single event to some small percent of their capital base. Capital constant insurer ability to sell adequate insurance as well as we discussed in medical zone. Okay, guys. Next, in the status, the federal government insurance fraud is especially identified areas in commercial for insurance. It is possible to find a single product with total exposure value is built in a search of an individual insurer's capital constraint. Okay guys, this is our discussion about insurance. Don't forget to like, comment, and subscribe to this YouTube channel. And see you next time.